In this video, I will present a simple system you can use to help you select the right market in Africa. I will also share 2 tips how to mitigate risk during the early stages of market selection and entry. Africa has 54 very diverse markets, which can turn market selection into a difficult task for anyone. A lot of emotional or uninformed decisions are being made at this stage, and these mistakes often occur at great cost, something which you may notice only after you have started your business. So let's look into each parameter for smart and strategic market selection in Africa. I will outline the steps in the exact sequence you can use immediately. Step 1. You want a dynamic and emerging African market, not just any African market. And this is really important to understand because, yes, Africa has 54 markets, but not all of them fall under dynamic and emerging African market. So how do you make that selection? For one, I wouldn't go with the GDP or the growth rate, because when you look at the GDP, you will find that some markets have quite an impressive GDP. However, they don't have the characteristics of an emerging market yet. They are very much at their infant stage, or there are other reasons that show a bigger GDP. So that's not a good indicator to go by. One thing that you could do, and this is really not the scientific way whatsoever, it's not really a systematic way, but I think it's a practical way for someone who needs to navigate through the markets and start with that first step. And that is to look out for markets that are really repeatedly mentioned in Africa business and investment news. Because frankly, the markets that are not dynamic and emerging, they hardly get mentioned ever, if at all, in regards to doing business or investment. So that's a possibility to go by, and make your list with some of the dynamic and emerging markets, and then move on to step 2. Step 2, your industry needs to be on a clear upward trend in the market you choose. So you have a look at your list with emerging markets, but not each of the markets on your list will actually provide an enabling environment to the industry you choose. So let's say you are interested in the ICT industry or sector. That's what you would like to go with. Only a few markets on your list will actually provide an enabling environment to the ICT industry. And that is because they have, the necessary infrastructure in place, the necessary local awareness among consumers, and they may have, a strong agenda in driving the ICT sector forward in that country. Or let's go with agribusiness, for example. Only a few markets on your list are really enabling the growth of the agricultural sector. One, of course, you need the right climate in terms of geography, but also you need the right business climate. So there must be real dynamics going on. First, in terms of an enabling policy environment, so a real will among policymakers to move the agricultural sector forward. There needs to be a lot of dynamics in that regards in terms of, consumer base. Maybe if you want to produce certain kind of foods for the local market, you need to make sure that you have people with enough spending power and, enough understanding of the product that you want to offer. So that's your step 2. And eliminate those markets that don't offer an enabling environment for your industry. Step 3. You want to take into consideration market size and geographic positioning on the continent. So your list is getting smaller. In the beginning, out of the 54 countries in Africa, you only put those on the list that were clearly emerging and dynamic markets. You then eliminated those markets that did not have an enabling environment for your industry, or in other words, where your industry was not on a clear upwards trend. And now in a third step, you're further eliminating by looking at market size and geographic positioning, and in which context that will be important for your industry or your business concept. Now, when I say market size, I don't refer to the land size. I'm referring to the number of the population. And there are markets that have a small population, and there are markets that have a very large population. The market size usually is very important for maybe medium-sized or larger companies who are really looking at a huge local consumer base, or who want to look at rapid growth. It is less of importance when you're starting out small as an entrepreneur or small business, because even in a market with a smaller size, you can very much find your niche. In fact, it is often an advantage or a benefit to a first market entrant to look at a smaller African market, because they're easily overlooked, and it is much easier to navigate in those markets than in those hugely populated African markets. So this is something you should take into consideration. The other one is the geographic positioning and how much of an importance that would have to your particular business concept. So it may be important to see, for example, do you need port access? And is that important for your business? Port access, for example, if you're trading, either importing or exporting certain goods. If you have direct port access, that will not only save you money, but also a lot of hassle, because it can always be difficult to track your imports or exports across various borders in Africa if your market is not stationed at a port. But there may be other businesses where this is not really of significant importance. The other thing in terms of geographic positioning, for example, and I won't go into detail on that in this video, is that you have different trade regions in Africa, and some of those trade regions are very, very dynamic, and they have taken down trade barriers among those member states, and there's a lot of cooperation going on in that regard. So being part of a dynamic trade region, for example, can also bring your business forward. So these are the things you should be looking at, and then eliminate further what you don't need. Step 4. You need to take local business environment and risk into consideration during market selection. So your list has already become smaller, and now you're left with just a few markets, and you need to look at business environment and risk. And I will say a little bit more about that later in this video. So there are different business environments, and especially when you are first entrant into Africa, or you're starting new, it is important in your decision-making process that you choose an African market that does not have a very difficult business environment. Otherwise, getting started and getting successfully started and successfully growing your business can become even more difficult. And step 5, lastly, the market needs to align with you or your company culture. What do I mean by that? For example, you need to look at the amount of capital you have at hand, the languages you speak or you don't speak, risk concerns you have, particular concerns you may have, the level of perseverance you have, climate, company culture. So to say a few words about that, for example, some of the countries you have left on your list may be French speaking, but you may not be able to speak a single word of French. So it will be difficult to successfully enter those markets. And it may be better to choose a market that is English speaking. So for example, that means to align it with your own circumstances. Another may be the amount of capital at hand. One tip I want to give you is that a market that has a difficult business environment, and we have markets with very diverse business environments in Africa, and a market that has a very difficult business environment usually also requires more capital. And the reason is because getting started in a difficult business environment will take much, much more time, and that will cost you. Another point may be that, there is a market that is relatively mild, has a relatively mild climate, and now I'm really talking about the weather and the climate. And there are some markets that may be extremely hot over most of the year. And maybe if you are not very good in a very, very hot environment most of the year, that may be something to consider. So these are these are the parameters you should look at and see that you choose a market in the end that aligns with your own circumstances and preferences. So you can use my SSMS, so that's the Smart and Strategic Market Selection, as a sequence of framework that can help you to select the best markets for business or investment in Africa. Start with listing the most dynamic and emerging markets, and then eliminate markets from your list as you proceed from step 1 to step 5. So let's do a recap for smart and strategic market selection. Step 1, you want a dynamic and emerging African market, not just any African market. 2, your industry needs to be on a clear upward trend in the market you choose. Step 3, you want to take into consideration market size and geographic positioning on the continent. Step 4, you need to take business environment and risk into consideration during final selection. And 5, the market needs to align with you. And you see, this is really an attempt by me to put this into some kind of system or framework that you can use, because we are looking at 54 markets, and we are looking at many different sectors and industries, and we are looking at even more possible business concepts or models that one could use. And it would just not be possible to go into the detail of all that in this short video. But I was hoping that I would be able to share some kind of sequence that helps you, one, to make you aware of what is necessary during market selection in Africa, but that also helps you to actually, understand how to go about it. And let's have a look at some of the risks. So, having said that, Africa is by and large defined as an emerging market. Emerging markets are volatile in nature, so they come normally with a certain level of risk. Unfortunately, not many entrepreneurs or business owners I met have actually done a risk assessment and laid out risk mitigation and management strategies. You should seriously invest your time and attention in this. Even a rapid risk appraisal can potentially save you a lot of time and money in the short to medium term. It will also help you to adjust your expectations. Now, when integrating risk mitigation strategies into your business plan, then that process has to start prior to market entry into Africa. It needs to start during market selection. Let's have a closer look at some of the risks. And today I want to share 2 tips how you can mitigate them. Here are some of the risks you may face in Africa: political turmoil or armed conflict, corruption, change in trade or industry policies, currency risk and inflation rates, terrorism, commodity risk, natural disaster, and unfortunately a range of other risks that I have not included in this list here. First, I want to clarify something. I'm aware that you may already be residing in a particular African market, or you have your roots there and you're either unable or not willing enough to be flexible when it comes to market selection. Then, of course, you need to come up with risk management strategy in your local market. But the tips and strategies I'm revealing now are useful if you're either looking from the outside in, so you want to choose the best market for market entry into Africa, or you're looking for expansion and market selection within Africa. Still, it would not be possible to get through all 54 markets in Africa and look at the many risks for each market, certainly not within the scope of this short video. So I'm looking at fast ways that can help you immediately in your selection and decision-making process. Today's 2 quick tips how to mitigate risk in Africa are for you if you are in the process of market selection, or that process will come up for you very soon. For you to understand the quick tip I want to share, I need to make you first aware that there are high risk and low risk markets in Africa. And I have noticed that there is a clear correlation between the level of risk in a certain African market and the rating of that market for ease of doing business. And it probably makes sense, but let's have a look. So in other words, low level of ease of doing business means a higher level of risk in that market. And a high level of ease of doing business, so doing business is easier, means a low level of risk. So there is a correlation between the 2, and that will be important for you to understand. Because there's good news. The level of ease of doing business for all 54 markets in Africa is measured and published each year by the World Bank. So when you look at the top 10 markets for Africa in terms of ease of doing business, you will find, by and large, the markets that have overall the least risk potential regarding corruption, conflict, commodity risk, inflation, and so on. And when you look at the bottom 10 markets in terms of ease of doing business, you will generally find markets that have a far higher risk potential. In fact, they're among the riskiest. So how can you make use of that immediately? And the good thing is that you will find the World Bank list online. So I'm sharing here the web address with you, and you can make a little note of that. But if you should be unable to write it down now, or you're losing your little note at one point, you can simply Google for ease of doing business. That's ease of doing business, and you want to add the word rankings. Because if you don't, you get the entire World Bank report, and that's a huge report. You don't want that. You want the one page with the rankings only. And once you're on the page, you will see all the markets. So it starts with ranking number 1, that's Singapore, and it goes all the way down to ranking 189. And you will find the African markets in between there. So you will find more of them towards the end, unfortunately, than in the beginning of the list, but that's fine. And you need to, just mark them, maybe start with the top 10, and then also have a look at the bottom 10. And you will find the first African ranking on ranking number 32, and that's Mauritius. So that's top for Africa, and then just work your way down. So you see, I really try to give you quick tools that you can use. I'm sure you will be, you will understand the fact that we have 54 markets, we have many more industries, and we have even more possible business concepts and models. And it will be very, very difficult to look at all of them and to look at all the various combinations. So I'm really trying in this video to provide you with certain tools or systems that you can just quickly use to help you navigate and to maybe help you in some of your decision-making processes. So I hope I have achieved it with this last tip, and let's continue. So tip 1 regarding risk mitigation in Africa starts with market selection, and that's the one I just gave you. The second tip I want to give you today in this video to help you mitigate risk in its earliest stages has to do with industry selection. And that is of particular help if you decided to enter a risky market in Africa. So to clarify, industry selection can be very, very important, or the right industry can be very, very important if you are operating in a risky African market. Because overall it can be said that there are high risk and low risk industries in Africa. This is not a technical or proven term, but there are sectors that are clearly much more subjective to corruption, conflict, or inflation, for example, than others. Higher risk industries, for example, include mining, construction, commodity trade, energy, among others. While lower risk industries include, for example, ICT, agribusiness, business-to-business and service industry, knowledge industry, fashion, among others. So here I just want to make you aware that the very selection of your industry may already determine the level of risk you will be facing in a given market. And that will help you in the decision-making process if you are, for example, trying to figure out which industry to invest in or which industry you want to choose for starting your business. But if you are going with a higher risk industry, maybe that's where your expertise is in and your experience and you really want to go for that, then at least it can also make you aware what to expect, and that means that you can amend your expectations, but also that you can come up with a risk management plan, and that even becomes more important when you are in a high risk industry. And I really think to have such a risk management plan can save you a lot of hassle. Now let's look at a couple of examples. Let's say somewhere we have an armed conflict erupting in parts of the market, or a terrorism attack, and sadly we hear those news regularly. So industries such as mining, construction, trade, energy, and even tourism will feel the impact immediately. They're either directly targeted, and we've seen that in the past as well, or they are indirectly impacted because the dynamics of that industry get completely interrupted. Obviously, it depends on in which industry you're in. Investor confidence can go down, or the people who usually buy that commodity or buy that product may not be able to easily access it anymore because the trade routes are interrupted, or there's fear in terms of tourism, for example, And so they feel the immediate impact of it, and they will suffer as a result, not just short term, but also medium term and even long term, if that is a repetitive pattern of, erupting attacks, for example. While lower risk industries, so if you have a terrorism attack or a conflict erupting and you're running an online business, or you are working with pharma cooperatives, or you're providing business services to larger industries, then the immediate impact and even the long-term impact may not be felt that strongly. Let's take another example, corruption, for example. You will find or face a higher risk of corruption in industries such as mining, construction, commodity trade, energy, because for one, you have a lot of large players in those industries. Some of them are co-owned by African governments, or you will have powerful international players, or new Chinese players who are offering at a much lower price than you. So the competition plays a role in corruption, because if you have a lot of high-profile players, then corruption will also increase. But also because in all those industries, you're heavily depending on the cooperation of government offices, right? You need a lot of permits, you need a lot of approvals, you need access to ports, you need people who get your goods into the port or out of the port, and so on. And because you're heavily relying on those third parties and largely government-owned parties, it will expose you to a higher level of corruption. While again, if you're in a lower risk industry and you run an agribusiness, you're producing food, or you're in a fashion brand, or you are providing business services, or you run an online business, then corruption is less of a problem for you. And that is important to be aware of. So, and that's what I wanted to really bring towards your attention, that the industry selection already determines the level of risk you will be facing. So let's have a look at the next slide. So in closing, choosing low-risk markets and low-risk industries can be a smart strategy for risk mitigation in Africa, in particular for first-time entrants into Africa and those who are getting started with a smaller amount of capital. So this is really the end of my presentation and my second video, and I hope you found the information and the tips I provided useful to your own undertakings, and that it will help you navigate and make some informed decisions. And that's really so important if you want to become successful in Africa and avoid some of the heartaches that are so unnecessary. And as I said, this was really just, a small selections of the kind of advice that I provide. And I tried to make sense in this quick video. And we will go into much more detail in this during the upcoming Africa Business Bootcamp and tour that I'm announcing shortly. And you may also find some more tips on my blog, africajumpstart.com. And I'll see you in the next and the last video.